name is Roddrelle Sykes. I'm the owner of NEMT Expert. I've been doing this since 2008, specializing in NEMT insurance, and want to thank you all that have just joined and those who were on initially for taking time to join this webinar. So I'll just kind of go into this. I'm not really a read a slide kind of person. I'll kind of bring in some personal experience and things that I've seen from clients I've had, and just kind of keep it high value, so to speak. So the reason we want to have this webinar, when talking to Leanne, one of the things that we want to talk about is the price increase that we're seeing, the compliance we're seeing, requests that are coming from brokers and contracts and things of that nature. So one, yes, I heard someone ask the question. I think it was one of the polls that Leanne put out about the actual insurance market getting a tad bit stricter, and that is happening. It's happening across the board. And one of those main reasons that is happening is compliance, right? So you have certain things out there. You have issues where maybe some programs are requiring people to put in certain telematics and things of that nature. Well, when they don't do it and the insurance companies can't get the data that they need, well, that's a compliance issue, right? And at that point, not only can they not know what's actually going on, but they can't accurately assess the risk, right? Insurance is a business of ratios. So I'm sure if you've been in the space long enough, you've been in a situation to where you've seen your premiums increase, even though you haven't had an accident or a claim within the next year. So when talking about that, that's one of those things where, hey, 95% of the insurance industry isn't having bad claims. But then you got a small subset, depending on the carrier that you're with, say they're blowing through limits or whatever it may be. They may not be blowing through limits, but I just kind of want to use hyperbole so you guys can truly understand where I'm going with this. They can't make all that money back from one increase. Yeah, this person goes up 20%, this person goes up 30%. I'll use a prime example. Yesterday, we did a renewal for a client. Her insurance went up 45% from last year to this year. All right. So we go through it, and she understood that she had some claims and things of that nature, but I don't think she understood how bad it actually was. Her loss ratio percent from last year to this year was 195%. So I think roughly, and of course we can't say client names, and I'll keep the numbers round. She had about $600,000 in claims and paid a little bit over $100,000 for her auto insurance. So with that being said, she's going to see an increase, but they can't make all that money back. We call that a non-profitable account, and that's what it's referred to in the industry. Once your loss ratio gets to a certain point, you're not profitable. So with that being said, that $600,000 that they've put out for her, they can't get that money back. So they're going to spread that risk across everyone that they insure in the industry. And forgive me, guys, I talk on my hands a lot. So they're going to spread that risk out, and they're going to spread that premium out to make it profitable on their end, because of course, insurance is not nonprofit. They have to make money. So just I hope I answered that question about that. So just a little snapshot about where the industry is headed. You are seeing a lot of broker consolidation. I think within the past 3-4 years, Vail has been purchased. Also, Access to Care, they're all under one umbrella now with MTM. Motive Care is still out there. But then you have some of your other players that are in the space now that are growing. Safe Ride, Allevi, they're growing. They're getting other contracts, Verida, throughout the United States as well. So while there is some consolidation, there's still some stiff competition, depending on where you're located. The industry is set to grow, set to hit $15 billion this year from an NEMT standpoint. Now, all of that is not going to be broker work. And I'll tell you guys, like I tell all of my clients, broker work is amazing if you can make it work for you. And it's going to keep your vehicles on the road. I understand as a business owner myself, I understand saying, hey, I've purchased these vehicles. I've purchased this high insurance. Let's go ahead and get the ball rolling. I want my vehicles running today. That is amazing. That is what you should do. But on top of that, I encourage all of you, whether you're my client or not, be reaching out to some of the direct pay options that you have out there. The dialysis centers, the wound care facilities, the home healthcare agencies, the short-term rehabilitation facilities, the long-term rehab facilities. I know that nut can be a little hard to crack, as well as the VA. That can be even harder. especially if you're not a VA certified business. But I do have clients throughout the country that have VA contracts that are not veterans. But I say that to say that nut can be a little hard to crack, but I encourage you all to go after those opportunities to supplement that broker work that you're getting if you're doing broker work at all. So top 5 trends that are reshaping NEMT. All right. So you'll see here telematics, stricter compliance, driver vetting, etc. I can't tell you how many people I see that send over MVRs for drivers that have major accidents or have had 2 major accidents within the past 2 years. A lot of time that's going to X you out right then and there from being added to uh, that driver schedule. So I would just encourage everyone, please, 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 when you get the MVRs, take a good look at them. All right, take a good look at them. Sometimes there are errors on there that I've seen it where people will say, "Hey, well, no, I was cleared of that," or "I took care of that," or "That shouldn't be on there." Well, they need to get that addressed as well, because when I send it over on your behalf, I need that MVR to be as spotless as possible. I'm not saying you can't have accidents. We drive all day, every day. At some point, everyone has a little fender bender or something along those lines. But we need the actual owners to take a good look at those MVRs before you send them over to us, because it's just doubling the work. And a lot of times the owners get frustrated with those things, or whoever you have in place of those things. They get frustrated when I go back and say, "Hey, this MVR is no good. Look at this person has 3 points on their license. This person has 4 points on their license." So, a lot of times, we have to deliver the bad news. I try to do that as least as possible. So I would encourage everyone to take a better look at those MVRs when you're pulling them. Um, Telematics, dash cams, those things are going to become staples in the industry. It's going to get to a point that everyone's going to be using them, whether you want to or not. Um, right now, it's about 50-50. I have clients who love them. I have clients who love them, but their drivers hate them. So the drivers pull them out on a consistent basis. You want to make sure those things are constantly in place and that your drivers are complying with those rules. I've seen people get dropped mid-term because they can't get that compliance percentage up, because simply the telematics are being unplugged, because the drivers feel like they're being watched by Big Brother. Frankly, they're basically just watching how you drive. If they're worried about Big Brother, then they should probably get rid of the smartphones and the smart TVs and all those other things out there. But telematics is a big one that's not going anywhere. Actually, you're going to see more and more carriers incorporating those things into their programs, and they're going to make it mandatory if you want good rates. Dash cams, everyone should have them. Everyone should have them. And I have this conversation often where it's a point where something has happened. They say, "Roddrelle, my driver's innocent. My driver didn't do that," or "the vehicle wasn't moving," or "she didn't slip out of the chair." You don't have any footage. At that point, it's he said, she said. You don't have anything to prove that your driver was not in the wrong, right? So when that person who says, "Oh, I'm okay," but then they turn around and they go home and they talk to their family member, son, daughter, whoever it is they confide in, they say, "Oh, well, you should go to the doctor." And then you call me and say, "Hey, Roddrelle, but she said she was fine." I get it. And maybe she is, maybe she isn't. Everyone knows that fraud is a huge issue in the NEMT space. So with that being said, I encourage everyone to get cameras inside and out. I've seen all type of claims. I've seen people attempt to get hit by walking in front of the vehicle. All right. I've seen people unbuckle themselves on footage and stand up in the vehicle to walk as the vehicle is taking off, right? So people are committing fraud, but you can't properly defend yourself if you don't have those dual facing dash cams. Everyone needs to have them. Like I said, it's going to get to a point where it's going to be pretty much mandatory for you to have those things. And you're not going to be penalized by the carriers. There'll always be carriers that will write you without those things, but you're not going to get the best rate. All right. Um, Driver vetting, retention. I know keeping drivers right now is a very, very, very difficult thing. I encourage all of my people to take good care of your drivers. Look at things as, quarterly bonuses, who's complying. I mean, because when you're talking about these telematics and things of that nature, you know which vehicles are being unplugged and not. If you don't know off the top of your head, then you could get it from the carrier and say, "Hey, how are my vehicles looking?" Typically, they'll put out something monthly or every 60 days that shows the percentage of your fleet that's properly operating those telematics. New insurance landscape, auto rates. We'll start there. I know that's the big one on everyone's plate. Just to kind of harken back to the statement I made when we started this, insurance is a business of ratios. Some of you are suffering from other people's claims. It is what it is. I'm just going to be flat out honest with you. It's not you. You're running clean, but other people are not. I tell my people the best way to combat that, um, if any way at possible, depending on who your carrier is, because rates are, and we're actually at this point, we're seeing more like 20 to 25. I haven't seen a 15% increase in quite some time. Most of the things I'm seeing are 20, 25 or higher. Um, have everything documented. I come across a lot of people that say, hey, we have policies for this, we have procedures for that, but it's not documented. It's all up here. Or they're telling the drivers what to do. When you come into work with someone like me that specializes in NEMT insurance, the best thing I can have you do is give me all the information that you're using, SOPs, safety plans, driver training, driver schedules, biannual training, all those good things, employee handbooks that you're having them sign off on when you bring them on board. Because what I can do is I can then take that documentation. I'm big on talking to my underwriters. So before I send over a submission, I pick up the phone and I'm having a conversation. Hey, this is what this looks like, and I'm explaining any little quirks that they may have, right? Because all NEMT insurance accounts are not the same, and there's going to be a little difference with them. So I like to go ahead and clear that out. I'm not a 10-page email writing type of guy, so I like to keep the synopsis short and sweet. But then I'll get on the phone with underwriters and we can kind of go through things. But the best thing you can do is have those things documented. It's not hard. You can find those things out on the internet and then, tweak it to your liking or, add things that you're doing at your company, and send that over to the person that you're working with, because that helps us complete the submission, right? And at that point, the underwriters are taking you a tad bit more seriously when I can say, hey, man, I know he's only been in business 1 year. He's running clean, but he's growing exponentially, because that's another thing we'll touch on as well. But I can say, hey, take a look at his SOPs. Take a look at his safety plans, right? Take a look at how they're training their drivers and the things they're doing on a consistent basis to make sure these drivers stay clean. That helps me put a nice, big, pretty bow on top of your submission. And the underwriters are going to look at you more seriously there, but they're going to say, oh, well, this guy isn't just in NEMT because he heard he can make some quick money. He's actually looking to build a business, because people that are looking to actually build a business, they're going to have these things in place. There are fewer markets out there. The market, it comes and goes. It comes and goes. I lost a market 2 weeks ago. I picked up 6 on Monday. So it comes and goes. People are coming in, they're dipping their toe into the water. Now, there isn't a particular carrier out there that's writing in all 50 states, even the contiguous 48. And when I talk about those 6 carriers, some of them are only writing in 4 states. Some of them are only writing in 10. One of them is only writing in 1 because they're fresh and they're new to the space. So they're, like I said, just dipping their toe in the water, to get a feel for it. So the markets, they're coming and going. I will say this here, as you grow your business, more opportunities are out there. People say there aren't a lot of opportunities, and there aren't. But as you grow that business and you get to fleet status, you're going to see some other things out there that you can take advantage of. Because at that point, you're generating more revenue, you've been in the space, and you're checking a few more boxes. With my carriers, I have carriers that will write brand new ventures. But then I have carriers that want you to have been in business for 5 years or more. But then I have carriers that want you spending $100,000 or more. But then I also have carriers that want you with 10 vehicles or more. So as you grow that business, as you stay in business longer, there are multiple boxes that you can check that are going to open up some other doors for you, especially when you get to fleet status. And once you get to 20, 25, and so on, then there's other things you can take a look at as far as captives, single cell, multi-cell captives, high SIR plans. That's self-insured retention. Excuse my jargon. I don't want to say anything that people don't understand, so to speak. So there are different things that you can take advantage of in that space after you grow that business. And like I said, once you check in those different boxes, even my people that with 1 or 2 vehicles, but they've been in business 5 years, they have different opportunities, because I can now place them with that carrier that has really good rates, but they don't want you unless you've been in business 5 years or more and are running at a good loss rate. Yeah, we touched on this already. What carriers want to see clean MVRs. They don't need to be, spick and span clean, like my grandmother used to say. But like I said, take a look at those MVRs because every day I get someone with an MVR with two major violations on it. With most carriers, they're going to X that out right then and there, or they're going to charge your arm and a leg to add that driver, right? I've seen people be charged $450, $500 just to add a driver. And while I haven't personally seen it, I have heard from clients that I brought on board that they were charged $2,500, $3,000, $4,000 just to add a driver. And people have paid those things because the market is so tight and it's hard to find a good driver. Right? So I get it. We touched on documenting the SOPs, having the cameras. Of course, you want to have the GPS because you want to be able to follow your vans and make sure they're going where they want to go. I could be on this webinar all day telling you some of the interesting stories I've come across from people, checking their driver's GPS and finding out where the vehicles are actually going in between breaks or after hours. You want to keep a good detailed log of incidents and accidents. And I tell people all the time, even when you're reporting things to someone like me, your broker or whoever you're working with at the time, we want to make sure to differentiate between an incident and an accident. If you call me and say, hey, Roddrelle, I just got rear-ended. My driver was driving. No one's in the vehicle. This person has insurance. I got their insurance. Police came out to the scene, etc. It was deemed that person's fault. Okay, we're going to let the carrier know of an incident at that point. And I'm very particular with those words because we don't want them opening up false claims. We don't want, and if I say accident, they're immediately going to open up a claim on your behalf. But if I say incident, well, then that's telling my claims department that, hey, we're just keeping you guys in the loop of what has actually happened. In 7 to 10 days, we'll have a police report. We'll follow up with that. But we want to keep them in a loop because, as I spoke to earlier, there's a ton of fraud going on in the market. So you'll see these incidents where people will be in the wrong, right? I'm dealing with one right now, 17-year-old girl driving with no license. Her mother was in the passenger seat. They didn't have insurance on the vehicle. They rear-ended a vehicle. But the mother is suing, even though they do not have insurance and she was letting her 17-year-old daughter drive. The mother is suing the NEMT company. And the NEMT, he's insured. They're having to defend that, right? So those are the kind of things that are seeing. That claim is really weird to me because this particular company owner actually had cameras and things of that nature, but the mother is attempting to sue, right? So those are the kind of things that you want to make sure that those things are out there. You want to make sure you have those things in place. And like I said, I know there's a lot of fear. Like, no, if I call them, they're going to open up a claim. That's why we want to use the term incident. You want to keep them in the loop because if not, they're going to be caught off guard when they receive a statement from a lawyer saying they're being sued on a claim they did not know about. Frankly, I don't know if the rates will ever get so high to the point that people can't afford, like no one can afford the coverage. And I say that because we see hard markets, we see soft markets, hard markets, soft markets, and those things kind of go and they fluctuate every few years. I mean, I see some things out there that are really, really ridiculous. I mean, I've had people come to me that are paying $30,000 a vehicle. I don't know how they're operating. I don't know how they're staying in business, but they're managing to make it work. As far as the companies that are pulling in and out, I know we're in the NEMT space, so we see that a lot. But that it really happens across all markets. There is, unless you're in something very, very cookie cutter where there isn't a lot of risk, companies are always going to pull in and out. And sometimes companies aren't pulling out for the reasons you think. Sometimes companies are pulling out or no longer writing because they've hit capacity, right? So it could be a thing, say, and I don't know this, but I'll use Berkeley because the person asking the question used Berkeley. If Berkeley has $50 million a year to write for the NEMT space, once they hit that 50 million, they either have to go back and get capacity or wait until 1/1 of the next year to write new business. All right. So sometimes they're pulling out for that. Now, more often than not, they're pulling out because there are losses and they're losing money and they haven't figured out a way to make money in the space. Typically, they'll come back in 18 to 24 months and they will have tweaked that program, is what you'll see a lot of. But I don't know if it'll ever get so expensive to where no one can afford the insurance, because keep in mind, different things are going to come into play. When we talked about the telematics, technology, things of that nature, those things are going to come into play. And as those things become mandatory, I would hope that over time it's going to increase efficiency across the board when it comes to NEMT companies, because it should cut back on fraud once everybody has dual facing cameras, because we'll easily be able to see, well, no, this patient isn't being honest with us. Look what actually happened. Okay, well, that's $50,000 that doesn't have to go to this lady who claims she fell out of her wheelchair. So I'm hoping things like that, and the technology and the actual people taking close proximity and really taking compliance and risk seriously, I'm hoping that's going to decrease the rates over time. Over time. We're all hopeful though, but I need it to stay steady because I have to sell insurance to people like yourself. So maybe that's some wishful thinking there. And but great question, by the way. It's funny. I just had a conversation about this. There are quite a few Morgan & Morgans out there. I see a lot of the same lawyer firms over and over, and particularly in certain states that are extremely litigious: Florida, Louisiana, Michigan. So yeah, on that front, to answer your question, the laws are going to have to change, truthfully. If they want good insurance carriers, I'm originally from Louisiana. I started my career there. So I know all about good insurance carriers not wanting to enter a state due to law. So we're kind of going to need a 1-2 punch on that one. And we're just looking for ways to add value to you all, other than just pushing insurance all the time. And so we're putting out ebooks quarterly. They'll touch on different topics. The tax one is from, well, we'll probably put that out yearly, but we're just putting out different things to add value to you all. And please, I encourage you all to download and let us know. I would love feedback to let us know if it actually helped you or not. Thank you very much.